What if I told you that one of the best investing playbooks out there wasn't written last week, but way back in the 1940s? Well, today we're going to unpack the absolute timeless wisdom of Benjamin Graham's The Intelligent Investor. And just so we're clear, this isn't about hot stock tips or the latest crypto craze. Nope, this is about a powerful mindset that has guided the greatest financial minds, forget this, over 70 years.
And hey, you don't have to take my word for it. Graham's most famous student, a guy you might have heard of named Warren Buffett, he put it perfectly. He said Graham planted trees that other men will sit under. And in the next few minutes, that's exactly what we're going to do. We're going to find some of that shade and explore the powerful ideas he planted.
So what was Graham's big secret, right? How did his philosophy create such a lasting legacy? Well, it all really boils down to one simple but incredibly profound question that every single one of us has to answer.
And here's that question. Are you an investor or are you a speculator? Now, for Graham, this is not just about semantics. This is the fundamental fork in the road that can determine your entire financial future. Everything, and I mean everything, starts right here. Just look at the difference here. An investor, they act like a business owner. They're digging in, analyzing the company's real value, thinking about the long haul. A speculator, they're more like a gambler, just betting on the short-term blips and flashes of the stock ticker. They aren't buying a business, they're basically just renting a stock, hoping the price goes up. And the stakes here? They couldn't be higher. Graham put it so bluntly. People who invest make money for themselves. People who speculate make money for their brokers. One path is about building your own wealth. The other, well, you're pretty much just making Wall Street richer.
Okay, so you've decided you're an investor, not a speculator. Great, but how do you deal with the market's crazy up and down mood swings without totally losing your cool? For this, Graham gave us the ultimate mental tool, a brilliant metaphor he called Mr. Market. So picture this. Imagine you're co-owners in a private business, and every single day, without fail, your partner shows up at your door to make you an offer. Now here's the thing about your partner. His name is Mr. Market, and he is, to put it mildly, emotionally unstable. Some days he's just bouncing off the walls with optimism. Other days, he's in a deep, dark despair. And these wild mood swings of his, they directly control the price he offers you.
So on his euphoric days, he's absolutely convinced your little business is the greatest thing since sliced bread. He'll offer to buy your share for some ridiculously high price, way more than it's actually worth.
But on his bad days, oh boy, the sky is falling. He's so terrified that he'll offer to sell you his shares for just pennies on the dollar, a tiny fraction of what you both know they're really worth. And here is the secret to dealing with this guy. You are in complete control. You can just shut the door and ignore him. Or you can take advantage of his madness. You can buy from him when he's terrified, and maybe, just maybe, you can sell to him when he's delirious. The point is, you let his mood serve you, not the other way around. Think Mr. Market is just a cute story? Ha! Look at this real-world example of Inktomi during the dot-com bubble. In his absolute euphoria, Mr. Market decided this company was worth a staggering $25 billion. Just 2 years later, in a total panic, he let it get sold for a tiny fraction of that. Same business, but Mr. Market's mood created two wildly different realities.
All right, so Mr. Market is panicking, and he's offering you what looks like a bargain. But how do you know it's actually a good deal? How do you protect yourself from getting it wrong? This brings us to Graham's most powerful concept of all, the margin of safety.
The idea itself is just brilliantly simple. First, you do the homework. You figure out what a business is actually worth, its intrinsic value. Then, you just patiently wait until Mr. Market, in one of his moods, offers to sell it to you for significantly less. That discount, that gap between the real value and the price you pay, that's your margin of safety.
One of Graham's disciples, Walter Schloss, put it in the simplest terms possible. It's just common sense. If a business is worth $1 and I can buy it for 40 cents, something good may happen to me. It just creates this amazing cushion in case you're wrong.
The whole thing is really a three-step discipline. Step 1, figure out the business's true value. Step 2, check the price Mr. Market is yelling about today. And the crucial Step 3, only pull the trigger when the price is far below the value. This simple process just strips the emotion out of it and forces you to be patient.
And why is this so critical? Well, because the future is always uncertain, right? Your math might be a little off. The economy could hit a speed bump. The margin of safety is your financial shock absorber. It's the buffer that protects you when things, inevitably, don't go exactly as planned.
Okay, so we've covered speculators, we've met Mr. Market, and we've built our margin of safety. But Graham's final lesson is maybe his most profound. It turns the camera away from the market and points it squarely back at the person in the mirror.
And really, this is the ultimate takeaway of the whole book. Graham argues that the biggest risks to your money isn't a recession or picking a bad company. The single greatest risk is you. It's your own emotions, your own impatience, your own mistakes.
I mean, think about it. Sir Isaac Newton, one of the most brilliant minds in all of human history, got swept up in a market bubble and lost a fortune. He later admitted that he could calculate the motions of the heavenly bodies, but not the madness of the people. If it can happen to him, it can happen to any of us.
So, you see, the final battle for an intelligent investor isn't fought on a spreadsheet with complex formulas. It's fought in your own mind. The real challenge is mastering those internal demons of greed and fear that make us all want to buy high and sell low.
And that leaves us right here with Graham's ultimate question. When you see Mr. Market acting like a fool, when you see the crowds getting swept up in either mania or panic, what are you going to do? Will you profit from their folly, or will you participate in it? The choice, as Graham makes crystal clear, is entirely yours.